Ah, All right. It's cracking good, people. Thought I'd go live a little bit and just kind of, I don't know, spin people up on a little bit of what's been going on with Bear Talk with a Veteran, and also hopefully get into maybe some basics, some general needs of charting, so that you guys can understand how to chart, what a chart is, so on and so forth. For those of you that don't know, and you may tune in and say, "Who is this guy?" Once again, my name is Tyran Cosby. I am the host of Beer Talk with a Veteran. Beer Talk with a Veteran is just strictly that. It's Beer Talk with me. All right, a veteran. Beer Talk is just general conversation, man. Stuff that we talk about and we hold in the barbershop, on the street, at work, so on and so forth. So that's pretty much what we got going on. And I want to go live and talk to a few people, especially some of my close friends that are near and dear to my heart, because May this month is Mental Health Awareness Month. I'm kind of big on mental health awareness, especially being a person that suffers from, well, I don't ever say suffer, but a person that has PTS. I'd never put the D on there, no D. But a person that has that, I kind of understand some of the things that we go through when we're talking about depression. We're talking about um, anxieties, the different things that come along with it. So, one of my things that I definitely want to give this month is my contribution. Is that the word? To Mental Health Awareness Month. And what I like to do is talk to some of my friends, not just be able to talk to them, but to give you guys the opportunity to hopefully be able to talk with a psychiatrist. And I happen to just know a psychiatrist, a very great one. Matter of fact, hell, just happen to be married to him. Matter of fact. But I did want to bring my wife on this month later on to Beer Talk with a Veteran and give you guys the opportunity to maybe ask some questions that you always wanted to maybe know. Um, Sometimes we look at we're having a bad day, sometime a little bit too long. So we may say, well, I'm just having a bad time in my life or a bad thing. But what we don't know that we're going through is certain type of mental issue. I wouldn't say issues, but mental things. Then just general conversations with somebody, it can kind of help at times. So that's going to be this month. I'm looking to do it towards the end of this month. I haven't solidified an actual date yet, but I want to. And but it will be before this month is out. So actually, hell, we're on live right now. Why don't we just pick a date? So if I was to say this month, maybe the 26th. I'll look to bring my wife on the 26th of May, and just let's talk mental health, man. Let's really talk the stigma that's in the Black community. Let's talk about the things that we sometimes want to ignore, we don't want to pay attention to. But let's talk about them. Let's figure out what is it that we could do to help. All right, so May 26th. Yes, definitely to be determined. I would love to have a mental health talk, and this is really with anyone, but I will 100% say that if you've ever worked with, for, or around Gunny Cosby, myself, then I'm talking to you, man. Some of us, we just need to talk. What the crazy thing about the military is we sit around each other and we tell stories, and we may say, hey, we had nightmares and just the things that bother us. And for us being veterans, we laugh about it. We laugh at the nightmares we have. We laugh at the crazy things that we've done. So it never really seems unusual until you get out. Once you get out and you're around people who've never been in the military and they hear these stories that you tell, and maybe even your sense of humor, it becomes something totally different. And sometimes you feel like you're on the island all alone. So right now, again, that'll be May 26th. That date is to be determined. All right. Um, Coach T and Dr. D. I like that. I like that. Um, but one of the things that I did want to do, because I say I owed it to a few people, so I will at least try to do it now, and that's to make videos. One, just kind of breaking down the basics of stock investing, but my thing is learning how to read a chart. Learning how to read a chart is like the key to getting into your investing game. You can't really do anything in the investment world without learning how to chart. Charting is the very, very, very basic, and that's the key to the vehicle. So y'all gonna have to forgive me for my dogs, by the way. I'm a dog lover, and all it takes is a squirrel to run across the porch and it's on. So what I want to do here is I'm going to break down the basics real quick. stop screen. So it seems that I am sharing my screen. So what I want to see is if I share my screen here, there we go. So I'm going to break it down on the very, very basics. Let's take let's go with that. So if I was to come here and I go to chipping day. And we look at the basics of the chart. There are several things that we always should be looking at. All right. My key thing is RSI. I would like to know the RSI. The RSI stands for Relative Strength Index. And what I'm going to do, but the Relative Strength Index. So what I want to do actually in Kimmy, Kimmy, please let me know if you can't see. I'm sharing my chart here, so I can't see any comments that may be made. All right, so what I'll say, I'll start with the RSI, the Relative Strength Index. So what you want to do is, when we're looking at the RSI, just remember, down here at the bottom, anything below a 30, we could definitely say once it starts forming a lake, that's a great opportunity to buy. Once it starts forming a mountain peak and it starts to hit that shade-in area, that's a great opportunity to sell. So for this reference, we'll say this is cold, this is hot. That's the basics of the RSI. Let's put a few indicators on here. So what I'm doing now, I just want to break down just the plain old basics that I would have a person look at, if we ever just started. All right, that's what we got. Now I'm going to go back and forth just to make sure I'm not missing any comments, guys. All right. So what is support and what is resistance? If you've been rocking with me for a minute, then you would understand that support and resistance. Support is just that, man. Support is what catches us. Support is a trampoline or a bed. That's something that we're bouncing on. Resistance is going to be the ceiling. So resistance is anything that a stock can't push through. So it's anything at the top. So what happens is a stock would normally be sitting somewhere. So right now, if we was to blow this up, let's take these few months away. Let's go to candlesticks. All right, so this is the very, very, just keeping it super clean, super simple. Earlier I stated support is the floor, supports the bed, supports the bottom pretty much. Resistance is going to be that ceiling. So anytime that a stock is moving and it starts to, let's say, come down, well, we want to find out where is support. So in this instance, support right now will be this green line. That is support. Why? Because the stock is currently sitting right here at 182.40. So support is sitting at 181 in this particular example. So what is resistance? Resistance is that ceiling. Resistance is what we can't push through. So resistance is going to be the ceiling. So if you're jumping on the bed, and each jump you're getting higher and higher, but eventually you're going to hit that ceiling. And when you hit the ceiling, if you don't have enough momentum, well, you're going to get knocked back down to support, which would be the bed. The more you jump, the higher you go. Eventually, you're going to break resistance, which is the ceiling. So in this case, you're jumping on the bed, you push through the ceiling. Maybe you're in the basement and you jump through the ceiling, you land on the first floor. Well, chances are, once you go through that ceiling, 182.92, which is this price right here. Once you go through that ceiling and land here, boom, you're now at a new support. All right, you are at a new support. You're no longer at your previous price. So we was at 181.63 and resistance is 182.92, then we would need to break that. If you look here, we have already hit that. The thing about a stock is only going to go where it's been. this? Yes. So sorry about that. I'm just jumping back and forth. So a stock is only going to go where it's being. So at 181.63, if we were sitting there, as the stock pushes through, it needs to break the previous prices that it has. So the quickest way to look at it is wherever the stock is today. If we was to look to the left, it needs to break all of those prices in order to be back in the uptrend. So if right now we're at 182.40, then all the prices here from, let's say, 183, I'm sorry, 184.90, 185.99, 187. This stock is going to need to break all of those to be considered back in the uptrend. All right. So again, we got support and we got resistance. Here, if you look here on the RSI, the RSI is just coming down from being hot. So remember, I said that shaded area would be considered hot. All right. So anytime a stock gets hot on the RSI, chances are it's going to come down. Anytime a stock is cold on the RSI, then there's a good possibility it's going up. So if we look back here on 19 April, April, Apple was cold. The RSI was cold. It immediately came up. If you can see there, it just touched that peak just a wee bit, pulled back down, came back up, touched that peak again, came back down, came back up, touched that peak again, came back down. And that's just kind of the pattern of stocks. All right. They go up, they go down. The thing about stocks is news article, news hype, rumors, tweets, everything moves a stock. All right. So if you just remember that anything can move a stock, good news will make it go up. Bad news will make it go down. All right. So that's support and resistance. And am I still good on anything? Can we get support and resistance? So if I was to chart this and I wanted to, let's move my annotation. One, I like the bigger the picture, the better. So the further you can go out, the more you can see, if that makes sense. So if we take the same example right now, we're looking on a 17-day window on an hourly chart. So to make it better, let's go to a daily look. And we're going to go out. I like to go out at least, give me 90 days. All right. So we can see here. And let me just get my annotations up. All right. We can see here that originally this was pretty much a support area that we were sitting at. And pretty much about 167, 144, 164 to 167 range was pretty much the support. All right, stock came down, broke support, bam. Once it broke, it triggered there, came back up to an uptrend. So now where does the stock need to go? I'm going to say eventually 190. It's going to need to break support, but if we was to come back here to about the 186, you always got to look where a stock has been. Wherever it's been, that's where it's going to go back. So it's trying to beat its previous prices. So just remember, everybody on the left, that's where we're trying to get back to. So it's like Mortal Kombat. If a stock falls, well, eventually on the way back up, it has to battle every price that it fell from. So I hope that makes sense. So you got support and you got resistance. So in this case, Apple needs to get back to about $187. So we got 186.81. So pretty much about 100. It needs to break 187. Once it breaks 187, then we just can look back and say, well, where was it? And chances are that's exactly where it's going. So 190.81, that's where we're going to be looking to break. So in this instance, if I was to invest anything into Apple, me personally, well, I would wait. I would wait till it drops back to a cold RSI. And we don't know when that could be, but I would wait till it dropped back. And then I would try to catch on the run up. You never want to buy a stock when it's already up and running, because chances are you may buy and then it's going to go immediately back down. So that means you bought high. So you always want to buy low, sell high. So again, support. Support is anything that we can walk on, bounce on, any price. 180.42. If this is the price and it was to break 180.42, then now we would be looking at 178, 178.67, 178.36, 178, 176.03, so on and so forth. All of these prices here are support because they are under the current stock price of 182.40. So I really hope that makes sense. So again, resistance is anything above today's current price. So anything above 182.40 right now is considered resistance. Anything below 182.40 is considered support. Support is anything under today's price. So if a stock is falling, the chances are we're going to say it's going to fall back to its next support. Whatever that price is, that's where it's going to fall. All right, so that's support. Remember, support is the floor, the bed, whatever we want to do that will support us, and resistance is always going to be that ceiling that we have to break through. The RSI, the Relative Strength Index, that just tells you the buying and selling, I guess you could say, power of that particular stock. So anything about a 30 and below, that price, that stock is oversold. All right, meaning everybody sold it. Too many people sold it. It's just oversold. All right. Once we hit about a 90 on the RSI and above, that 70 to 90 range, but definitely once we hit about that 90 and it starts to shade, I think I can go back. But if you remember, let's go back just a wee bit. You can't really see any on here, but back here, it's a little shaded here. And then we're shaded here at the bottom. So anything above a 90, once you start touching about that 70, but you start hitting that 90 range, it's going to be considered too overbought. So too many people have bought it. It's way overvalued. So the stock price is going to come down. So once you just start to learn how to work those things, it'll really, 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 really help you out in a lot of your trading and investing. So with that being said, I will say, I will say, Kimmy, if you out there, did you have any questions as far as any of the stuff that you have, or I don't know, are we good?
Yes, I did have a question. Well, I was wondering if I could get some clarification. Okay, so can we talk a little bit more? I want to make sure I get this. So the Relative Strength Index, or the RSI. So can you, I guess maybe talk to me like I'm 5. So go back and re-explain that to me. And then you said the 70 to 90 means what? And then over 90 means what?
Okay. I was trying to go a little simple, but I tell you what, let me see if I can do this real quick.
I think you said maybe under 30 or something means.
Yeah, I have an actual slide I want to try to use real quick.
Okay.
That may help us.
Perfect.
So if you just I'm trying to pull it up on my computer now, so just give me a second.
Yeah, take your time. But just in general, what again does relative strength index mean?
Yeah, so relative strength index basically means it's just the strength of the stock. So anything that's above 70, you start to get into that overbought area, meaning too many people are buying it. So it's getting a lot of attention. And sometimes it's not worthy of that attention, but it's getting it. So it becomes, what am I trying to say? Like, let's say super hype. It's getting a big head. So, all right. So it's just overbought. Once you hit about that 30 and below, well, that's considered oversold. So too many people have sold it. It's just too many people sold it off. So it's almost like now you can get it for cheap.
So RSI under 30, stock may be undersold.
There you go. Well, what did you say? Undersold? So yeah, let's just say, yeah, it's just too many people sold it off. So oversold.
Oh, oversold. Okay. I said under. Thank you.
Yes, ma'am.
Clarification. So RSI, so we want to keep it over 70, like under 30. So we want to keep it in between the 30 to 70-ish range.
Well, I would say this: if you bought in, so I can't seem to find my slide here, so just work with me. But let's see if I can go back so I can just show you. All right. Let's go to maybe let's go to an hourly chart because I think you can see it better. All right, you can. So all right, so if you take this hourly chart right here, you can see down here, we're at about 30 and below. You see the shaded area right here. That's 30 and below. That's considered oversold. Too many people have sold it off. Up here, we're 70 and above. So we haven't quite touched that 90, but at about 70, you start running what's called hot. RSI is hot. So that means that it's overbought. So yeah, so as you're coming in and you get ready to buy, you need to check the RSI, because if you're buying when it's already up and it's hot, there's a strong possibility the stock is going to pull back. So now when you buy, it's going to immediately drop. So if you can help it,
losing the value of what you put in it.
There you go.
You bought it at.
Yeah. Okay. And immediately. So that would mean like you would buy it at, let's just say in this case, 182.40. And probably as soon as you buy, the stock is going to drop to about 180, 181 or so, which means that you're going in the wrong direction because you may have bought a call saying it was going up and then it's going down. Now, whenever it touches here and it gets hot, we know that, well, 70 and above, that means that, well, it's hot. And what happens when a RSI is hot? It pulls back. So if you're going to get into a particular trade, let's just say you wanted to trade this and you know how to trade and all this, and I saw that the RSI was hot. Well, I wouldn't do a call per se saying that the stock was going to steady go up. Why? Because history has taught us, if you look back here, anytime it touches 70 and above, it's going to come down. So therefore, I would look for a pullback, so a put, as we would call it, instead of a call. So RSI hot, 70 above, overbought. 30 and below, oversold. So I hope that answers your question. Did you still there? Can you hear me?
Oh, yes. And so the RSI changes daily or hourly.
Yeah, it changes per second. Yeah, it changes like as soon as the market open and the stock is moving, your RSI is moving. Because again, as you can see here, here is low, it's oversold. So what happens when it's oversold? It's going to go up. So if you look at the price here, boom, price goes up. Now, once it starts hitting here, it's too hot. The price is, basically overbought. What happens? Bam, pullback. Stock goes down. Here, RSI cold. What happened? Stock goes up. And so on and so forth. This happens all day. So it just depends on the chart. Right now, we're looking at an hour chart. So if you look here to the top left, you have what's called an hour chart. You got different ones. You got daily, weekly, monthly, hourly. I always say my rule of thumb is the further you go out, the further you go out and look, the better you can see a stock. So if I go to a weekly chart,
going to the past, you mean going back, or you mean over time, or
essentially that, yeah, going back over time, basically the history of the stock. So this would be the weekly chart. So the further we go out, let's say the bigger charts we got weekly, monthly, hourly, so on and so forth. If we could look at a monthly, then now we're looking at months, and it's weeks within the months. So we're going to be looking at way bigger candles. But if we look at like a 30-minute chart, those are going to be smaller candles. So it's going to be a whole lot more of them. So in this instance, this is a weekly, and I'll look at it just for this example. I'll pull it out to about almost 4 years. So these are a little bit bigger candles. So this is like weeks. So we're looking at for about 3 years, 11 months, and 29 days. These are week candles. So you get a better picture of where it's going. Now, if I come back in and I show you, let's go 1 hour. Well, not even that. Let's do 2 hours. 2-hour chart, that's going to look a lot different from what you was just looking at. Why? Because it's a lot more mumbo jumbo. So now we would have to go to a smaller window because those are way more candles. So a lot of this is kind of confusing right now because you probably just got to get the basics of support and resistance down first. But all of this plays hand in hand. But I always say the further that you go out to look, the better you can see. The tighter that you go in to look, where it's harder. So again, RSI cold, it's a 30 and below, stock goes up. RSI starts getting to that hot portion, that 70 and above, stock comes down. So, and again, it's a zillion indicators that you can use. These are just the basics. So even if you looked at it on a Webull or Robinhood or anything, you should have MACD and RSI. Those are just standard. Those are just kind of standard on all charts. So once you learn how to work those and read them, that's the biggest thing. So these indicators make these squiggly lines make sense. All right. So RSI cold, that means stock should be going up. Stock goes up. So I hope I didn't confuse you on any of that.
Okay. What is a candlestick? Please.
Okay.
Or
So
stick? Is that what it's called? Is that what it's called?
Yes, ma'am.
Candlestick or stick? Okay.
Yeah, candlestick. So candlestick is just that. It's it's the body. Let's see if we can take this a little tighter. So when you're looking at charts and you got your red and green, we call them candlesticks, red and green, and sometime here you see these big long red. Well, these are all called candlesticks. So a stock, whenever a stock opens, it opens and closes at a certain place, at a certain point. Maybe I need to go a little tighter. All right, so you can see a little bit here. So a stock may, let's say here, this stock ran up to 172.71, and then it ran down. Your candlestick is going to be what that stock did within that time period that you're looking. So if we're looking at a 2-hour chart, 2-hour, 120-minute chart, then each one of these candles will be, in this case, maybe 120 minutes, an hour, 20 minutes. If we're looking at, or 2 hours or whatever the hell this is, I ain't got my glasses, okay. But whatever this is, but if we go to a daily chart, each one of those candles will be a day. So they're the same thing. Well, this is just a bigger one, but now each candle represents. There you go. It represents a day. So I may want to trade this for the next 3 days or so. So I would probably 100% want to know what does this look like on the daily chart. Once I plot on the daily chart what it looks like, I may want to come in and say, okay, well, now I want to see what it looks like on the 30-minute chart. Because you could trade on all of these. You could trade for 30 minutes. You could trade for 5 minutes. You could trade for 1 minute, 30 seconds. You could trade as quick as you want to. So each chart will represent that time frame. And now you see on the 30-minute time frame, we see more of the RSI moving.
Okay, so if it's a month chart, each stick mean a month. If it was a day chart, each stick would be a day. A minute chart would be a minute.
There you go. And if you on a
candlestick is a unit. Okay, it's a unit of measurement determined by the type of chart that you were looking at that time. It's a unit of measurement. Okay. All right.
That's the technical word definition of it. Yes, ma'am. All right, but did I answer your question on that one?
Yes, the candlestick is a unit of measure determined by whatever type of chart that you're using. Green, I'm assuming greens are better.
Well, yeah, if you're doing what's called a call means going up and a put means going down. So if I'm doing a call saying that I think that this stock price is going to go up, then yeah, I want my candlesticks to be green. If I do what's called a put saying that, I think that price is going to go down and the candlestick is green, then that means I was wrong and I lost money because the price went up when I said it was going down. If I do the vice versa and say that the price is going down and I do a put, I don't know if I'm saying, I don't know if I just said that in reverse, but basically if I do a put and the price goes up, then that's not good. So I want my candle to be red on a put. Yeah, call going up, put going down.
Okay. Just making sure. Okay, call going up, put going down. Okay.
Yes, ma'am.
And that's based off of what you're looking at with the trends.
Yes, with the trends, but 100% on that time frame. So a chart, let's say a stock may, let's say you're looking at it on a daily time frame. On that daily, it's a lot that goes on in that day. So in that chart, that candle, it may represent a day, but in that day, that stock probably went up $5-10, and then maybe it crashed back down $15-20, or vice versa. So in that particular time frame, on a 30-minute, even a 5 to 10 minute, you could probably make thousands of dollars off a crazy move before stock either goes down or up.
Okay. And you just have to know how to read the charts to make your predictions, correct? Although nothing's 100%.
Yes, nothing is ever 100%, but it's a calculated guess now. It's not just a shot in the dark. It's very calculated. So yeah, you want to follow what's called the trends, but most importantly, it's all based off of support and resistance. So when you know where the support is and the resistance is, then it's kind of like you can plot it. So in this particular example, again, I'll show you this real quick. If I just want to know which way did I think this stock was going, down or up, I see that the stock peaked at 187, right? 187 even. And then the stock come down because obviously RSI was hot. Stock comes down and then it tries to fight its way back up. In order for this stock to be considered an uptrend, it would have to beat 187 on this attempt. It has to. So in this case, it did not. It hit 185.99, and then that's where it hit the ceiling. So immediately, I would already know that is called a lower high. So 187 is where it should have been, but it only went to 185. So I already know that it's going to come down. So now on its third pump, if it doesn't break 185 and even attempt to hit 187, I know 100% is coming down. And in this case, it hit 184.90. And then it came back down. But in this case, you got this one, it crashed down to 180.42. It went back up. It did not basically break resistance. So it came back down. But when it came back down, it did not come back to 180.42. It actually stopped at 181.32. So this will be considered making a higher low. Does that make sense? So the ones up top is telling me that it's going down, but here it's making a higher low. So it's still kind of in that, it's basically just didn't hit a zone. So it could play in that zone. But if it comes back to 181.32 and continues to go down to 180.42, I would probably 100% eject, depending on where I got in at.
Okay.
If I'm holding this as a stock and I want to add in, then chances are, like the RSI and everything is starting to tell me that it's getting ready to come back down for a bounce. So that's where I would want to re-up at, meaning that's where I would want to jump in at, or that's where I would want to buy more. But I sure as heck don't want to buy with a RSI of 70 or above. It wouldn't make no sense because that just means I'm gonna lose my money.
Okay, that makes sense.
All right. So, but yes, that's essentially what you got. Those basics is something that you can see on Webull, you can see it on Robinhood, you can see it on really anything. But the RSI is the most important thing. So my thing would be is if you have time tomorrow or whenever the market is open from 9 to 4 Eastern, then just find you a stop and just watch it move. Maybe watch it on a 15 or a 30-minute time frame. And just watch it move and then watch the RSI. And you will notice that the RSI follows the stock. Now, the good and bad to it is the RSI, it follows the stock. So therefore, it's going to have a delay. shit. The stock is going to already be moving by
Okay.
the time RSI catches up. So what I'm saying is, once you learn how to understand a lot of this, then you'll see that, hey, if the RSI is at a 70 or above, then I'm just going to probably wait on a re-up versus just jumping in because you didn't know any better.
Okay, so where can I go to watch stocks live? Like the live you're talking about? Is this like NASDAQ or what are you talking about? You're talking about like Wall Street?
You can go, well, me personally, I use stockcharts.com. That's the starting tool. So the thing with charting is you can look at a lot of this stuff on Webull, Robinhood. You can look at it there, but you can only see so much and you can only see so far. You can't really chart on it. So most people have to have what's called a charting tool. So this one is stockchart.com. That's what I use. I think another one is Trading View, I believe it is.
Stockcharts.com.
Yeah, that's what I use here. I think you got Trading View. You got man, it's quite a few of them. You can even go on. I wonder, actually, you know what? I'm gonna show you that. Let me stop sharing. You can even go on like a Google Finance or Yahoo Finance, any of those, and you can almost, I wouldn't say you can chart, but you can kind of chart. And
okay, let me ask a question for those of us in the audience. So stock charts ain't free.
Well, okay, there you go.
I just went to the page.
yes.
Yeah, okay. Let's take it back. Okay, go ahead, back.
All right. So the thing with a charting tool is stockcharts.com, even Google Finance, Yahoo Finance, a lot of them, they'll let you see so much for free. The goal for everybody is to make money. So they'll let you see so much for free. But once you start understanding how to work it, then you'll say, oh man, I need more of whatever it is. And that's when they're going to probably hit you. But for the basics of learning how to chart and all of that, you don't really need a subscription because you're just doing the basics. But once you get it, well, yeah, because you're going to want to be able to draw more. So.
Okay. So maybe next time we can maybe pull up one of my Webull stocks and you pull it up in stock charts to show me what maybe I'm missing or would be overlooking? Or do you feel like in the beginning stages, I don't need stock charts to do better?
I don't think you need it for a subscription, but you do need it to chart. Yes. I do feel something is good to chart.
So you're saying to really make better educated guesses. Could I say that? I would need a tool to help me get more in depth than what I could get on some of the free services.
Hands down, yes. Because the better you get, the more you're gonna, I won't really say need, but it 100% more you'll want. You're gonna want a platform that can do a lot of things, and then you're gonna want to do a lot of things. So, but for the basics, you can use a free one until you understand what support and resistance is.
Like a free program.
Yeah, like a free program of a stock charts or a trading view. Again, a lot of them, they'll let you come right on and probably chart. But on most of them, you may only get 2 indicators versus 3 or 4. So you would have to just use 2. But if you wanted more, you would have to get the subscription.
Oh, okay. So they do have a free version.
Mm-hmm.
Okay. Yeah. So if you're just trying to maybe learn with 1 or 2, that might be good to get a little feel and then see if you're ready to go to the subscription.
There you go. Yep.
So could we see, well, I have a chart if you wanted a card.
Yeah. All right. And I'll pull up KTRA. I'm very familiar with what you speak of. Now, the thing with this one is, and there may be some people that's watching later on. So you have what's called your regular stocks, as we call them, your NASDAQ, S&P, Dow. And then you have penny stocks, which most of them would be, I think we call them over-the-counter market or so. So KTRA is one of those because this is the company that's trying to make it to the big boy, trading form, the Dow, the S&P, so on. So we are looking at KTRA. And KTRA is I forget what it stands for. Kintara Therapeutics. So this is on a hourly.
So it's like a medical supply or something.
Yes, they are in the medical field. I forget exactly what they do.
Oh, okay.
You may be able to help me out on that because I forgot.
Yeah, I forgot. I think Maurice told me, but I feel like he said something in that field.
Okay. So now this is a daily chart, and we're gonna look at it for about 90 days, give or take. All right, so this is pretty much it. So this was, I think earlier we were speaking, and I was saying that this particular stock had went down. It was like 11 cents or something like that, and that's pretty much was probably back here. And then it went down to 10, and then it came up 19, and I was sitting at about 15 cents. So
do you see a surge on April 3rd?
It's looking like probably about right here. So that's probably what that is. Yeah, from 9 to 24.
3.4% surge on April 3rd, possibly.
I would imagine that's what this is. Yeah, to 24 cent. Look like.
So then what happened? It just plummeted?
Well, remember, like I said, yeah, because a lot of people, they'll trade it, but they don't hold this as a stock. Like this company hasn't really, this company hasn't proved that it's worthy enough to be in anyone's portfolio, but it's still on the market, so you could trade it. So imagine this at 8 cent to 24 cent. A person, who traded it, he might have came in and put even the simple $100. But let's just say you came in and put a couple $1,000 on it, and it went from $8 to 24. From 8 cent to 24 cent. That's one hell of a move for the money that you put in. Now he's going to take that money. Yeah, now he's going to take that money right back out, which is why the stock fell. And then they're going to rinse and repeat, meaning once it bottoms out, it finds bottom, and they're going to ride it back up to its next destination. Sorry about that. But they're going to ride it back up to its next destination. And in this case, it was 19 cents. So again, this 19 did not break 24. So we already know that it's going to come down. So now this pump, it would pretty much have to take out the 19 cent. If it does it, then we know that it's going to be coming down lower, probably back near these ranges here. So again, this isn't really one that a lot of people will hold. So it's what we may call a pump and dump, meaning people will buy in here because maybe there was some good news coming out that day. Maybe they had earnings. I don't know. But something took place to make it take off, and it did. And the person who only was going for a quick ride, he got his money and he got the heck out, and that's why. So normally let's say this was an Amazon, this was any other company, then this may be a continuation run on because it's a worthy company and they prove that they can make money. This company here hasn't really proved that. So people are only going to run up, they're going to make money, and then they're going to dump it.
Oh, I see.
So with this one now, again, that doesn't mean that this company won't be something. If this is a company that we watch and they starting to make, the thing with companies is us as investors, we just want to know, is it making money? If that company is not making money and growing, nobody's going to put their money in it. But even right now, if this company is on the verge of making money, I wouldn't say bet the bank on it, anything, but it's like 15 cents. So, maybe $10 here, $20 here wouldn't hurt to add if you already have it in your portfolio.
Oh, I see. Okay.
Yeah. But to put it in my portfolio, no, I wouldn't. I probably wouldn't put it in my portfolio.
So if I have stock in there now, would you probably, based on the trend line, would you say hold out or?
Let's see here. Based on, so I don't know if you can see my screen here, you see the RSI is sitting between 50 and 58. So that's still a good range because remember, we already stated that about 70 is going to start getting hot. At about 70, we can look for a pullback. So you still got a pretty good run up that could possibly go. Again, that it depends on the time frame that you're looking at. if this is just more than likely, and this is just be stock, I don't even think you could trade this. So if I'm putting money in it, the great thing about stocks is it's never useless until you sell it. So even if you bought it for $10 and it slams down to $6, well, it's not solidified yet that it's $6 until you sell. If it's a stock and you can hold it, then there's a great possibility that this stock will come back up. Just need to give it time. We don't know the window, but there's a strong possibility it's going to come back up.
So you're constantly selling and buying.
Mm-hmm. Yeah, that's kind of the name of the game. Yeah. So the stuff that you want to buy and hold, that could be something that you got a long-term window for. So maybe it's retirement, maybe it's kids' graduation, maybe it's, any of that, because stocks, they take a little time to grow. Options, well, they don't take that much time to grow. Options are kind of grow right away. Options, you're just putting your money on steroids at that point. So stocks are kind of slow grower. We say for retirement, but that doesn't mean that you can't buy stocks now and sell it next year or sell it next week. Yeah, you can sell any day, any times. It's just the stocks move slower. That's all. 50-cent move in a stock is just a 50-cent move, but a 50-cent move in options, well, that could be a couple $1,000s off that little move. So, yeah.
Okay.
Yeah. So just to pretty much get to your thing, me personally, I don't think a lot of people need to worry about purchasing a charting platform just yet until you understand what it is. Once you start understanding what support and resistance is, and you start knowing how to learn and draw your trend lines, then I would say, okay, you might want to look into getting a subscription because you're starting to grow. Right now,
I think if we could maybe do like one little piece, like a little 5 or 10 minute piece, like for maybe 10 days or something, so every other day, so we could help break it down a little more.
You know what?
For us beginners.
I would respect that. I would respect that, and I don't.
Because that gives you a day to learn it, a day or two to learn it. Then it give you a couple days to practice it and look into it, and then soak up for the next step.
I dig that. I'm cool with doing that.
Okay, so tomorrow, so till next time we meet, I'm gonna go on Yahoo or stock charts, and I'm gonna look more into my stock, Kintara, and see the candlesticks. I'm gonna look at the RSI. I should be looking for the month or the week. Well, if I do it during, another question. When is the stock market hours again, you said?
The stock market is pretty much open. It's going to be 9:30 to 4 p.m. and that's Eastern. So 9:30 to 4 p.m. Eastern.
Stock market 9:30 a.m.
Yep. To 4 p.m. And you got what's called aftermarket. So some platforms, they'll still allow trading past 4:30, but majority of them shut it down at 4:30.
So if I try to trade on my stock right now, it just is going to hold it till it's time for business hours the next day or something?
Yeah, more than likely it's going to do what's called a queue. It is say that it's been queued to be purchased when the market is open. So you may go to work, you may set it in the morning to buy or sell, whatever the case, and then you go to work and it's automatically set. So you may be at work, and once it triggers whatever your price was that you had, it'll trigger the sell or it'll trigger the buy, and you just be at work the whole time chilling.
Okay.
So yeah, so you don't have to watch or anything. So.
Okay.
But definitely to answer your questions on KTRA, I would say I would want to see what it does tomorrow. Here it opened at 14 cents. It had a high of 15 cents. It needs to break about 16 cents. So we will see tomorrow on the push up tomorrow. And this is what on the daily. So yeah, I would want to see where it closes tomorrow. If it closes tomorrow above 16 cents, Lord forbid, above 17 cents, then could be on the uptrend. But if you're holding this as a in your stock or portfolio, let's just say for the long run, then I'll be honest, you want that sucker to come down. Why? Because you want to get it at a discount. You want to get it as cheap as you can get it.
Okay. Mm-hmm.
Yeah. So people here that
Buy
bought
more.
Yeah, so like let's just say you was holding it, and it came down to 8 cents, and you said, "Man, 8 cents is great for me." Maybe you put $50 on it.
And
Now,
you
when it goes
sold
from
it when the surge. You sold
yep,
it during the surge.
and probably right up here, maybe you didn't sell all of it, but you do need to sell some of it. You want to recoup at minimum what you put in at minimum. So if you put $200 in, then now when it pushes up here, let's say get the 300, 400, whatever the case is, at bare minimum, you want to take your 200 out. So now whatever that's left in there, that's free money because you already took out what you invested. So what I do is in that particular case, if I put 200 in and then it goes to 400, I'm gonna probably take 250, 300 out because I'm gonna make sure that I pay myself. Now what's left in there, that's free money. So I'm gonna let that ride, and then I'm gonna go and I'm gonna jump on the next trade, or I'm gonna jump on the next investment. So now you got money that'll be growing, hopefully, and then because that's free money, and then you got the money that that you took out to go get into something else.
Okay.
So that's why we call it's a rinse and repeat. You may put your $250 investment, you go up $500. You can either take your $500 out, but at bare minimum, take your $250, and then you dip. So it's a rinse and repeat because you're only using the money you made money off of.
Oh, okay.
So
that's how to make it grow.
That's how I make it grow, and that's the easiest way, because other than that, you're going to be using your hard-earned money. You're going to be using all the money that you went to work for and everything to try to do this, and chances are you're going to take an L on it. So the best thing to do is to just take a little bit of your money, make some money, cash in on that, and then just repeat the cycle. Like, don't try to get rich off of one investment or so. No, just keep letting it make money. All stocks are going to go up and they're going to go back down. So you catch it at the bottom, ride it to the top, sell it at the top, ride it to the bottom. Once it hit the bottom, buy more, ride it to the top, sell it at the top. And that's what you keep doing.
Okay. Well, I got my homework, so I will come back. I'm going to look. I'm going to be trying to see if it closes tomorrow above 16 or 17 cents. I know my stock market hours are from 9:30 a.m. until 4 p.m. Eastern time. So I'm really trying to see what it ends at the end of the day, like 5.
Yes.
Eastern.
Right, most definitely. You want to see where it opens at. So when the stock market opens tomorrow at 9:30, let's see where it opened, because it may be at 15 cents right now, but tomorrow when the stock market opened, it could be at 19 cents. We don't know. So that would be what we call a gap up, but that's a whole nother, episode of all of this. But for the most part, we want to see where it opens tomorrow and then where it closes at tomorrow.
Okay. Oh, okay. I need to check opening.
Yeah, so open obviously at 9:30. Pre-market opens about, I think, 7:30. So around 7:30, if you went on certain platforms, Webull, Robinhood, whatever, you could check it in the early mornings, and you may see it moving. And what I mean by moving is it may be at 18 cents and it's going to 19 cents, or it may be at 15 cents and now it's moving to 13 cents. So in the pre-market, you can see it. It's nothing you can do because you can't do nothing until 9:30, but you can at least see it. So sometimes it's a tease and sometimes it's a torture, because if you see that you're losing money, it's nothing you can do to 9:30. So if you're losing a lot of money, then it's just nothing you can do. And when market opens, chances are you probably lost all of it or you lost half of it. Now, on the other hand, is you may check it in the pre-market and you said like you want your price to go up, and maybe it shot up $2 in the pre-market. So when market open at 9:30, it's going to be a great morning because you're already making money. So that's the beauty of the early morning market.
Okay. So I'm trying to just do the regular hours because I don't think I'm pre yet, but
well, most of the time you're probably up, you know what I'm saying, making your tea or your coffee or a bagel, whatever the case. So the pre-market is open at 7:30. So, most people, you check it. I mean, you always want to check it just to see, because you want to know where your money is at. So, but
Right.
it's not a major requirement, but eventually you want to.
Okay. Okay. Okay.
So, yeah, but that's that. You got your homework, and yeah, I don't mind knocking out a few of the couple of short videos and stuff to hopefully spin people up on this.
Okay.
So, all right. So we
All
Gucci on
right.
everything.
Okay. So I got my homework. Okay. Okay. I'll be back.
All right. Well, I'm gonna do my goodbyes to everybody, and Kimmy, I appreciate you being on. All right, to everybody that's still there, I will, may tune in, I should say. That may tune in. I definitely want to say I think that investing is something that we all should do. It don't matter who you are, your age, it don't matter your race, it don't matter anything. I think it's something that we all need to do because money is something that we all need. When you look at the state of the world right now, gas is expensive, food is expensive. Just living alone is very expensive. And having one paycheck, that's too close to being homeless. So I think that you should have some type of residual income coming in that you're not physically sweating for. And for me, learning how to do investing, especially trading, that's the 100 thing. That's the 100% thing that helped me out. It's nothing more than I love in the world than to be able to sit on my own couch in my own house and make my own money. Never once have to get off this sucker to sweat and go make it like I was taught to do and like I previously done. So it's nothing wrong with working. It's nothing wrong with any of that. But I do believe that you should be able to take your work money and make yourself more money. If COVID didn't teach us anything, it should have 100% taught us that one paycheck, one income coming in this house, it's not enough. Because as soon as you get quarantined and cannot go to work, you still got to eat and you still got to feed your money. Feed your family. So with that being said, I do not have a problem with doing more videos like Kimmy asked me to hopefully get a few more people spun up on how to understand stock charts and support and resistance. So I don't have a problem with that. So again, we'll mark the calendar right now for the end of May. Me speaking with my wife on some mental health things that we need to know about, especially in our communities. And yeah, a lot more things coming up with Beard Talk with a Veteran. So if you've been rocking with me for a minute, then you know that this channel was started mostly for the people that I love and the people that I respect. So I want it to be a point of where you guys can come to a place. Beard Talk with a Veteran is not just me running my suck all the time. It's no crap a place for veterans to come, tell your story, tell your successes, tell your failures, tell us how we can grow. Let's all give each other some. I'm cool with laughing and joking and having a great time, but I always think we should always have some type of substance when we leave each other. So if I sit and talk with you for 4 hours and I'm just as dumb as I was when I came in, when I came in, then we wasted our time. But if we act dumb and we leave each other with a nugget, well, we both learn something. So I'm hoping that I'm not hoping, but that's the purpose of Beard Talk with a Veteran. So if you're a veteran out there and you got a story to tell and you got some info that you want to share, you got anything, man, let's chop it up. Damn sure if you've ever worked with me anywhere in the Marine Corps and you know me, then you hit me up and let's chop it up, man. And let's have a good time, man. This world is too crazy. I just think we need to smile every day. All right. So with that being said, I love y'all, man. Check us out, Life Behind the Beard. If you've been rocking with me, then you know lifebehindthebeard.co. That's my website, lifebehindthebeard.co. CO. Check us out. So if there's ever any money that I've helped you make, if there's ever anything out there, then just send a thank you. Check us out on the website and go buy yourself something nice. You know what I'm saying? And support us. The money that we make with us, honestly, I can say it doesn't really go to us. It goes to people that you guys will probably never meet. There's people in the street that sometimes, man, I know that I'm blessed and I'm good. So I love to go buy them something to eat if I can't cook it for them. Then I love to go buy them something to eat, something to drink, a jacket, a blanket, a pillow, like just anything to help their life just for a few seconds be better. So that's normally where the money for Life Behind the Beard go. So just so you guys know. So anytime you contribute to us, yeah, just know that your money is going to a good cause. It ain't going to my grocery or any of that. I got my own goddamn money. So love y'all, man. Peace. And we'll be chopping it up. Real talk with a veteran. All right. Be easy.